And let's shift focus to one of the big breakings that we are getting to understand on Zee, because the Zee-Sony merger or the saga continues because Axis Finance has moved to NCLAT against NCLT. And let's get in more details on this particular news flow. What does it mean for Zee? Let me take it across to my colleague Ankur Mishra then. Take it away, Ankur.
Yes, for all those who thought that NCLT has approved the Sony merger and this is the end of it, there is a new twist and turn to that story. Axis Finance has moved higher court, that is NCLAT, that is the appellate tribunal and higher court than NCLT, and their contention remains the same, that their dues needs to be cleared before the merger is finally approved. Hence, on the approval of NCLT, there is a petition which has been moved to NCLAT. Now, as far as the process is concerned, right now there is a rejoinder, meaning the notices have been sent to the companies, that is Zee Entertainment, for their reply. All depends whether or not NCLAT admits the petition and also puts a stay on Zee-Sony merger or not. So that decision has not been taken yet, but as far as the first step is there, Axis Finance, one of the key NBFCs which had raised objections against Zee-Sony merger because their payment has not been made, has moved NCLAT for now, which is kind of negative for Zee-Sony merger as of now.
Thank you so much, Ankur, for flagging of what's happening and what's the latest development coming in on Zee. So that's a hit back coming in for Zee, because now Axis Finance has moved to NCLAT against NCLT approval, and that's why we are seeing this stock seen to be tanking, trading at the day's lowest points with a cut of 1.6%. So that's the negative news flow. And what does it mean for Zee Entertainment? And nevertheless, the stock is reacting sharply to it. Thank you so much, Ankur, for that. But with this, let's move on back to the Market Fatafat row, wherein we are highlighting all the stocks that are buzzing in trade. And onto the technical front with this, let me welcome on board Arpit Beriwal from Motilal Oswal Financial Services. Very good afternoon, Arpit, and let me come to you for your first stock itself. And from the pack picked of Tata Consumers, tell us how the chart's looking like for Tata Consumers then.
Yeah, very good afternoon, everyone. So looking at the overall chart setup of Tata Consumer, we have seen a very good momentum across broader market. Talking about Tata Consumer as a chart structure, it is trading at lifetime high. Monthly and weekly setup is quite strong. It was consolidated in between 850 to 880 zones from past many sessions. But looking at the overall chart setup, we are expecting strong momentum higher towards by 4 to 5% at current levels. So we would recommend to buy Tata Consumer around 880 to 882 zone with keeping stop loss of 25 points, 855 for an upside move towards 925 levels.
All right, let's shift focus. Let's talk about one of the top gainers on the Nifty right now, and that is UPL. And that particular counter is in focus in today's trading session. And why is UPL in focus is the fact that Antique has come out with this, with a note on UPL where they've gone ahead and they've upgraded the stock to a buy rating from a hold rating, whereas they revised the target price to about 780 rupees per share. If you look at the revision compared to yesterday's closing price, that revision is approximately 28% upside is what Antique is expecting coming in for UPL. They're saying the improving macro situation, stabilizing product price as well as receding channel inventory and a stock price correction is one of the reasons why they are actually bullish on UPL. They are also saying that they are expecting agrochemicals firms revenue as well as EBITDA growth to rise in H2 of FY24. This is on back of the high channel inventory situation improving, and because the prices have stabilized. Also, they are expecting a margin expansion on a year-on-year basis in H2, aided by liquidation of high-cost inventory, lower raw material prices as well as lower base in Q4. So all in all, a thumbs up coming in from Antique for UPL. They've upgraded the stock, given a target price of 780 rupees per share, and that's the reason why this particular stock is in focus in today's trading session. Shrishti.
Moving on, let's shift focus to what's happening with Phoenix Wills, because for today there's another brokerage note coming in on this counter from Motilal Oswal, where they have reiterated their neutral rating on this particular counter but have raised the target price to 1845 rupees. So not much significant gains from the current market price is what they are seeing on Phoenix Mill. What they are also highlighting that from their FY23 annual reports, the company has strong execution capabilities with its retail portfolio doubling in the last 5 years. That's about the history, but going ahead, they have significant business growth in the new malls, and healthy growth trajectory for the retail sector is something that will aid the growth for Phoenix Mills. On the back of this particular report, we have seen the stock starting the day on a positive note and still holding and recovering from the day's lowest points, holding a gains of 0.8%.
Alright, moving on, Arpit, let's talk about L&T Tech, that mid-cap IT player. How is it looking to you on the charts? Do you think it stands out amongst the rest of the mid-cap IT stocks?
Yeah, so talking about overall mid-cap space, we are expecting strong momentum across IT pack. So talking about the LTTS, the chart structure is very strong. It has given a major breakout on a weekly scale above 4600 levels. The weekly structure, it is formed from past 9 weeks higher highs, higher lows. On daily structure also, the structure is intact. It is giving pole and flag breakout on daily scale after 6 sessions, expecting good 3 to 5% upside from current levels. So we would recommend to buy LTTS at current level 4700 with keeping stop loss at 4600 for an upside move towards 4900 then 4950 levels.
Okay, moving on and coming to you, Ashesha, because though the markets are off today's highest point, but look at the move at KPI Green Energy. This counter has a day's highest point itself, gaining around 3%. Tell us what's the news flow.
Well, yes, you're right. At the day's highest point, sitting on with a gain of nearly 3%, the company yesterday evening informed the exchanges that they've successfully commissioned 7.8 megawatt wind solar hybrid power project. Now, this comprises of about 4.2 megawatt that has been fulfilled by the company itself, KPI Green Energy, and the balance 3.6 megawatt solar capacity has been done by company's wholly owned subsidiary KPIG Ingertia Private Limited. So on the back of this news that came in, the stock is soaring in trade today. Remember, this commissioning has been done for one of company's clients, Mono Steel India Limited, Surat. So on the back of this successful commissioning that has been done by the company for this particular client, the stock is gaining in trade today, nearly 3% higher in trade as we speak.
Alright, moving on, Arpit, let's talk about Tech Mahindra. You did speak about L&T Tech, but Tech Mahindra is as good as a large cap player when it comes to the tech space. How is this one looking on the charts? In the last 6 months, just 13% return, but do you think that we can expect some more going ahead?
Yeah, so talking about TechM, we have seen being a quite underperformance in past many months. So we have seen a quite laggard, but looking at the overall chart setup from past few weeks, it is from a strong base near 1220 zones. On weekly structure, it is forming higher highs, higher lows from past 7 weeks. Weekly scale, it also given a fresh breakout after 65 weeks. So we're expecting slow and gradual momentum towards 1400 levels. So at current junction, the risk reward is quite favorable within the IT space because it hasn't been performing so well. But slow and steadily, looking at the chart setup wise, we're expecting good 7 to 8% upside move in coming weeks. So at current level, one can go buy TechM between range of 1270 to 1275 with keeping stop loss of 1240 for an upside move towards 1350, 1318 levels. So it has been underperforming, but looking at the old chart setup, risk reward is quite favorable. So good upside momentum can be seen in coming weeks.
Okay, moving on, and Ankita, let's shift focus to what's happening with Concor, because as the stock surpassed that 700 mark, it's seen no stopping, and today itself holding a gains of around 3%. Tell us what's the news flow on Concor then.
That's correct, Shrishti. Concor is buzzing in trade and it is closer to the day's highest point right now. And if we look at the news flow that's coming in for Concor, we have a note coming in from Jefferies that Jefferies is maintaining a buy on the counter, and they've hiked the target price to 825 rupees from 775 rupees. Now they feel that roll to rail cargo shift is seeing a lot of traction. They also feel that the faster turnaround, there is a faster turnaround time and 15% plus cost differential that is actually helping the rail a lot. The FY24 guidance remains at least least 10% on a year-on-year basis for Exim and 15% on a year-on-year basis for domestic volumes growth. They also believe that Concor should start to regain its lost market share as its DFC network presence starts paying off, and on the back of that, they're maintaining a buy on the counter and they have hiked the target price, and we are seeing that movement in the stock coming in up more than 2.5% in trade.
Alright, that's Concor for you, but Arpit, let's talk about Grasim, because yes, Grasim also has a news flow that is supporting that move in today's trading session. But on the charts, how is Grasim looking to you? 21% in the last 6 months, not that disappointing, isn't it?
Action we have seen in overall cement pack from past few days. Good buying is visible across cement pack. So talking about Grasim as a chart structure wise, it is trading at lifetime high. On weekly setup, it is given a fresh consolidation breakout after 5 weeks. So slow and steadily the base of the stock has shifted higher, and it is in the past also we've seen it is a gradual mover. Slowly steadily it has shifted its base from 1200 to 1400, 1400 to 1600. Another new base is around 1800, 1820 zone is a major support zone. So going forward also we expecting good 5 to 7% upside move in Grasim. So in Grasim also would recommend to buy in the zone, buying zone between 1910 to 1920 with keeping stop loss of 40 points below 1870 for an upside move towards 2020, as Grasim is the leader in the cement pack and we are expecting good outperformance in cement stocks in coming weeks.
That's the take coming in from Arpit, that a good outperformance in the coming piece is also expected from the cement pack. But this is definitely on the back of the fundamental news flow that we have been hearing on the cement counters from the past 1 month, because do understand that this is a seasonally weak time for all the cement companies given the rainfall. But in this time, all these companies have performed well, and not just that, the growth has been supported by price hikes. And those are the highlights from Motilal Oswal reports today itself, where they say that resilient pricing amid a seasonally weak period is what all these cement companies have undergone, and the price hike rupees 30 to 35 per kg has been implemented in the eastern region from September 2023 beginnings. And we have been highlighting to you from the ET Now's channel check that throughout India, which particular areas are going ahead and hiking the prices of these cement bags. And on the back of this news flow, we are seeing sustained moves on cement counters like Ultratech, the Almia Bharat, ACC. All these counters are buzzing, and even today Ultratech is holding itself in green, as well as Ambuja Cements.
Alright, that is the cement pack that is in focus. Let's move on. Let's talk about Aster DM, and that particular counter actually hit a record high level on an intraday basis. The stock saw an uptick of as much as 3.9%. Now it's trading higher by about 2.8%. One of the reasons why that spike that you can see on the line graph coming in for Aster DM is the fact that there was a block deal that took place. About 24 lakh shares changed hands via block deal today, and the price for that was around 339.3 rupees per share. Suppose that block deal announcement, you can see Aster DM buzzing in trade. We are yet to get the details about the seller and the buyer in this particular block deal, but remember the Aster DM is also buzzing on back of brokerage notes also that have come out, which have actually gone ahead and upgraded the stock.
Okay, moving on, let's shift focus to the pharma space then, from hospitals to pharma now, because Arpit has Glenmark Pharma on his radar. And Arpit, no stopping for Glenmark Pharma happening. Once again, a 52-week high level for Glenmark Pharma. Tell us what are the next levels that you're watching out for.
Yeah, so absolutely we've seen a tremendous rally across the pharma pack from past 5 to 6 months. So talking within that pharma space, Glenmark has been a huge outperformer. So if you look at the monthly chart from past 8 months, it is forming higher highs, higher lows with structures which indicate that bulls are holding strong command in the space. On weekly scale also, the momentum is strong. Past few weeks, we've seen a dip towards 830, 840 levels. However, it again regained its momentum. On daily scale, it is forming a higher highs, higher lows and forming and holding well above its 20 DEMA, which indicates the overall the uptrend is intact. So looking at the overall chart specific, within the pharma pack, we are expecting the stock to outperform. So Glenmark is now trading around 860-65 zone. So positionally, it is likely to move by 8 to 10% eventually. So one can go long in Glenmark in the buying zone between 860 to 865 with keeping stop loss of 30 points, 830 as a stop loss for an upside move towards 920 levels in coming session.
That's the take coming in on Glenmark. Let's stay with the pharma space then. Shesha, Venus Remedies, why is this one in news?
Yes, in fact, the stock was trading in the green earlier in the day but has now slipped into the red marginally. The company has received registration confirmation for customs duty exemption. So yesterday evening, the company said that they've received Department of Scientific and Industrial Research registration for customs duty exemption. This significant milestone will allow the company to avail exemption, reinforce its commitment to research, excellence in research and innovation, and its substantial contribution to the healthcare sector. So on the back of this exemption that the company has received, it's a positive. The stock was gaining earlier in the day but has now slipped into the red.
Okay, moving on then, and let's talk about the sugar space then. And Ankita, all these sugar names are seeing sweet moves today. Look at the move in Balrampur Chini. Other than that, all these sugar counters, Renuka Sugar as well, showing good gains. Tell us what's the news flow.
Sweet spot right now, all of the stocks that are mentioned, Triveni Engineering, look at Dalmia Bharat, Dwarikesh Sugars, all of them are up 7%, 11% and more than 9% in trade, all of them firing on all cylinders. Now this has come on the back of a note that Damp Capital has come out with. They feel that the demand supply is favorable in this zone. The domestic sugar prices are moving in upward trajectory. The ethanol blending program is progressing very well for the sector, and the large part of the molasses-based ethanol capex is now completed, and the global sugar prices will remain firm in the medium term. And on the back of that, they have initiated buy on a few counters. Balrampur Chini, they have initiated a buy with a target price of 510 rupees. Triveni Engineering, they have initiated a buy with a target of 415 rupees per share. On Dalmia Sugar, they have initiated a buy with a target price of 540 rupees per share. And Dwarikesh Sugar, they have initiated a buy with a target price of 120 rupees per share. And on the back of this news flow, we can see all the sugar stocks being in the sweet spot, firing on all cylinders.
As the sugar counters, all of them seeing very sweet gains in today's trading session on back of that report that's coming from DAM Capital. But let's move on and let's talk about Bajaj Healthcare, because that particular counter is soaring in today's trading session. It actually saw an uptick of as much as 8% on an intraday basis. No doubt right now the stock is trading higher by about 2.3% or so. And the reason why Bajaj Healthcare actually saw good gains is the fact that the company said that they've received a US FDA EIR for their manufacturing site in Vadodara. So on back of that, you can see the Bajaj Healthcare seeing a good buzz in trade today. It has hit a highest level since Jan 4th, and this is a second consecutive day of gains coming in for Bajaj Healthcare in today's trading session.
Okay, but with this, let's move on. And Ankita, coming to you, and tell us what's happening with Lloyds Steels then, because all these metal packs are shining bright today. But what specifically are you spotting on Lloyds Steels?
That's correct, Shrishti. Lloyds Steels is buzzing in trade. In fact, it was locked in the upper circuit of 5% at 44.15 rupees. Now, this comes after the company has entered into an agreement with Bhabha Atomic Research Center, or BARC, for the transfer of technology. Now, they said in the agreement that they include the transfer of technology of multi-effect distillation with thermo-vapor compression desalination technology in India, and selling the same in India and abroad. Now, this license is valid for the next 5 years from the date of commencement of this agreement. And on the back of that, we can see Lloyds Metal, up. Right now, it is up 0.1%, but it was locked in the upper circuit of 5%.
Okay, moving on then, and let's shift focus to what's happening with SBI, and the PSU banking stocks are on the roll. And Arpit, from the pack, you have picked up SBI, finally trying to move above that 600 mark. But will SBI be successful or not? You will tell us. So tell us what are the levels that you're watching for SBI.
So as you rightly mentioned about, we have seen a very classic momentum over in PSU pack. So past few has been fantastic for PSU space as a whole. And within that, SBI has been the leader. So talking about SBI, technically, it is trading in a broader range between 560 to 625 levels. So on weekly scale, it has formed a strong base near 575-80 levels. Multiple dojis we have seen that indicates from the downside the buying is visible. It is from a strong bullish candle, and along with that, we're expecting good momentum within the banking space. So as SBI is being a heavyweight of banking space, we're expecting that SBI is likely to scale to its previous lifetime high near 620, 625 levels in coming session. So SBI is being a top performer and top pick. We would like to go long SBI within range between 595 to 597, with keeping stop loss of 584 for an upside move towards 625 level. Because it's at a lower band, so the risk reward is quite favorable at current juncture.
Let's talk about Kirloskar Ferris because this particular counter saw a good up move on an intraday basis. If you look at the stock, the reason why that actually saw an uptick is because the company has received a nod from NCLT for the takeover of Oliver Engineering. That is a firm that is related to business of ferrous casting and machining. The resolution plan also submitted by Kirloskar Ferris for Oliver Engineering's debt has also received a nod from its debtors. So on back of that, you can see Kirloskar Ferris seeing a smart move of as much as 5% in trade today, Shrishti.
Okay, so that was the last talk on the Market Fatafat edition. With this, we are completely out of time, viewers. Thank you so much, Ashesha, Ankita, Arpit, as well as Kunal earlier for highlighting and joining us for all the stocks that are buzzing in trade today. But with this, it's a goodbye from me and Cheryl and the entire team who put the show together. But viewers, don't go anywhere because closing trades will take the action ahead.